Hello everyone, how's it going? In this video, we're going to try and analyze Docusign, whether it's a good investment or not. So we'll look into both the bull case scenario as well as the bear case. Let's get started. Number one is the bull case. Now, this is a report, an analysis of 100 baggers written by Tony. So he went over a couple of 100 baggers in the past and he found out some underlying patterns which were common in all these 100 baggers. And there is something interesting in one of these patterns, and he mentioned that how there is PE expansion that occurs in these 100 baggers, and that happens when the growth on a quarterly basis is an incremental rate. For example, he showed if there's a stock that's growing on an yearly basis about 25%, but quarterly it doesn't grow much. It has the same 25% growth over the quarters. But if you had another stock which was growing incrementally over quarter by quarter, so for example, it started off with 20% and then 20%, then 30%, and then going all the way to 40% in quarter four. If that were to happen, then you would see an expansion of PE, and that will fuel this 100 bagger phenomena. And if you look into Docusign, this is a quarterly growth which has been going on for the past few months. Now, if you look into the annual growth, you can see there's a continuous growth in revenue going on with Docusign, which is a good thing. Now, next is the brand value. Docusign over the years have created this massive brand for themselves. Nowadays, you won't call e-signatures. You would call, hey, I want to do Docusign. It was something similar to what you would do in the past for Xerox. You wouldn't say you want to do photocopy. You would say, I want to do Xerox of this. So it has created a very strong brand value for itself, and that will grow and that will keep on going. At the same time, there's a very high cost of switching, especially if you're using DocuSign for some sort of legal and very important purposes. It is difficult for you to leave DocuSign and jump into something else because you don't want to miss all that important information that is stored in that system. Now, next is the spawning activities. DocuSign started off with a couple of other products. Now they're doing the e-signatures, which is very popular and started at the right time just before the COVID era. And it is helping them very nicely. It's a very old company back from 2003, and they've done quite a bit of other products in the e-signatures line. But now they're still spawning, and spawning is one of these activities that help the companies go on for longer durations. And they're doing everything revolving around that e-signature concept. You can see they're now also doing DocuSign payments, analyzing monitors. There are a couple of other things that they are getting into in addition to the e-signature concept. Now, this is Dataroma that gives us a track of all these super investors who are into this company. Right now, it shows only 2 super investors coming in. And if you look into their activity, this is one of the interesting ones. If you have Chase Coleman, he has a couple of a big share in this. It's one of its top 5 companies hold it. But at the same time, you have another person, Lee Enline, Maverick Capital. If you look into his portfolio, it's a very small portion of what he owns. So he has 40% of his portfolio in one company, and the rest are just very, very minuscule. It doesn't make a lot of effect onto him. But in case of Chase Coleman, yes, it's among the top 5 portfolio in his portfolio, and he has. But if you look in his portfolio, it's almost like a Noah's Ark. So a lot of companies that he's holding right now. Now let's look into the bear case scenario. Number one, it's not a founder-run company. It's run by another person. He basically considered as an agent. An agent, when they run the company, and a founder runs a company, it's a different scenario altogether. When the founder only worries about the company. That's the only thing on his head. And he doesn't care about what his reputation and everything matters in the market. But on the CEOs, which is run by an agent is more worried about his career, his reputation in the market. So there's a different mindset that runs between a founder and an agent. But we don't know how much of that affects here. Second is the amount of shares that is held by the insiders, by the owners of the company. It's only about 2% to 4% range. It doesn't give the right value here on Yahoo Finance. But you get the picture. It's not too much. And, Monish Bobrai mentioned about it. Charlie Munger mentioned about it. They talk about how, show me the incentive and I'll show you the outcome. So there's not much of incentive aligned along with the shareholder. I would want to see the owners of the company also invested in the company. So I know that their interest and my interest are on the same line. Next is, if you look into the insider activity, you can see quite a bit of selling going on. And this is going on for the past few months, especially this year. But if you go all the way, but this is going up to 4 pages, it tracks up till 2020. You can see it's all nothing but sales going on. Now, Monish Popat said mentioned about how sales doesn't matter, because sales could be for many other reasons. There are a variety of reasons people sell. But if they buy because they know that the value is less. You don't see much of buying going around here. It's all selling which is going on in the company. Now, next is the revenue growth that we see here. It made about $500 million in revenue, and the company has a market cap of about $51 or $52 billion. That's a huge increase. And if you consider that there's no growth going to happen, and it's just going to continue with $500 million, it might take about 80 to 100 years just for the revenue aspect. I mean, it's cash flow negative at the moment. It's losing money. It's burning cash on a quarter-to-quarter basis. But even if I were to consider, hey, just by going by the revenue, it's going to take about 50, 80 years for my money to come back if I were to buy this company as a whole. Let's say hypothetically I had 52 billion, and if I bought the company, it'll take me so many years to get my money back just to become even. Now, this is called the margin of safety. I don't know if it was quoted by Buffett or by Dodd from Graham and Dodd, where he mentioned about how if you want to build a bridge and you know that you're going to have about 10,000 pounds of trucks going to travel through that, you don't make a bridge which can carry about 10,000 or 20,000 capacity, but you go and make a bridge that can carry up to 30,000 of capacity. It's not that you're expecting 10,000 to become 30,000 at one point. You want to keep that margin of safety so that if anything were to happen, if for some reason something happened, the bridge can withstand that capacity. So that's the reason you go and keep that margin of safety. And the same thing should be implied in the way we invest. So the amount of money we put in, with the 50 billion market cap, there is very less room for Docusign to make any mistakes. If at some point they miss their earning guidance, if they miss something and they didn't have a good quarter, the share price will get a very bad beating. Now, this is something about the different competitors. Now, we saw how Docusign has created a brand for itself, and it's the topmost, the best e-signature out there. But at the same time, there are so many other companies who are doing this. Now, personally, in my case, we were introduced to this company back in March of 2020. Just before that, we had some real estate projects that we were doing this, and they had made us Docusign some contracts with them. And at that instant, we came to know about Docusign. And right in March of 2020, when the whole economy was basically shut down, we had to go remote. That's when we looked out for different e-signature aspects, and we came across Docusign. We started using it, and we loved the product. The way they have, it's very seamless. It is very easy to pick up. It was very seamless, and right then we started jumping on it, and we were happy, and things started to work smoothly even though we were doing remote work. But this is where we ran into an issue. Right in 3 months, just in one quarter, we burnt about 300 contracts. So we had 300 contracts signed in that 3 months. And then we got an email from Docusign stating that, hey, you guys have exceeded your capacity. We wanted you to move into a different plan. We were using one of the standard best value plans back then. It was $300 annually, and we were okay with it. But then we got an email from Docusign stating that, hey, you have exceeded because you can only use 100 envelopes per year. And remember, we did 300 in 3 months. So that's when we realized that it's going to be, this was a small clause right in the bottom. There's something which we missed, and we started using it happily. And then the moment we came across this email from Docusign, it didn't feel so good. So we immediately started looking into other options and went through this list and try to find other companies, looked into their own sectors. And almost everyone has that 100 envelopes cap on all of their products. Then we came across Adobe. Adobe was also has its own e-signature. This seemed a little bit more on the same standards of Docusign. So we went with this and started using this. This again had that 100 envelope issue going on. Then we came across this company. It's called JotForm, And they had a free version to start with, to be honest. But at the same time, they had the $24 and $29. Well, I think we are currently using the bronze version, but they allowed about 1,000 monthly submissions. That this is where we come in. It helps in the amount of capacity of signatures that we are doing it. And this is a jot form, simple technique. You just upload a form, you just put on the signatures wherever you want them, and people can simply sign it. And you can have multiple types of forms included here. It was much relatively cost efficient to what we were doing. And currently we're doing this for the past more than a year or so, and it's working fine for us. So just wanted to share this with you, giving out both the bull and the bear case scenario. But with that, take care, stay safe, bye-bye.